we now look at claims. The main focus of an insurance company is claims. What we will see is what is claims, what is the process, how is claims managed in an insurance company, what are the types of settlement of claims, and what are the issues an insurance company will face in claim settlements. So by definition, what is a claim? It is the main business of insurance, the promise to pay in the event of the contingency resulting in financial loss to the insured. So a claim, a motor third-party claim. We have taken insurance, we have taken premium from a customer, owner of a vehicle. We have made the promise that in the event that the car meets with an accident and injures a pedestrian, our insurance policy will pay compensation to the pedestrian as decided by the Motor Accident Claims Tribunal or the court, which is authorized to deal in motor third-party claims. Similarly, if we have insured our flat against insurance for fire and riots risk, the promise to the insurance company makes to us is that if a fire takes place, an accident fire destroys our home, insurance company will compensate us for the loss. So compensation will be paid for the financial loss we have suffered. So what we find is it's the main business. It is also the major cost of an insurer. In normal cases, insurance claims comprise of 65% of the expenditure of an insurance company. The more the expenditure involved means the insurance company is walking a tightrope. The business will not be profitable. So premium must be sufficient to cover the claims and extra costs. How is the claim process? A loss has occurred. We have insured a factory manufacturing industrial products. There has been a fire. That factory has an insurance for fire. So the customer has to inform the insurance company that there is a fire loss. As soon as they have informed the insurance company, the first step is the notice of the claim. So what they will inform? Normally this notice is in writing. It may be a telephonic call, but it must also always be followed in writing. And this notice must be given within a time frame. Now, as the fire is taking place, the first job of that owner of the property is to try and save as much of the property as possible. So maybe fire brigade, police will be called. They will be involved in trying to save the property. Thereafter, the insurance company will be informed. But it must be within a reasonable time. In many insurance policies, you will come across a time limit ranging from 7 days to 15 days to a month, within which a customer has to inform the insurance company. Usually it is said in a reasonable time. Now when the notice is given to the insurance company, brief details of what happened. So a fire has taken place, the factory owner will say, there is a fire which happened in this particular unit or this section, and this is what happened, the worker was doing something, and description would be given. What was the property damage? Some amount on estimate of what he thinks is the loss. Now that may not be the final, because until the full details are verified, it's after all a fire, we can't go immediately while the thing is still burning, and even after the fire is put off, it will be smoldering, so it will be some time before anyone can go and start verifying. The heat will be too much to go inside. So what will happen now? He informs the insurance company. The most important, he has given notice. He has to also mention the policy number, so insurance companies can link whether the insurance is there or not. So once that notice comes in, the insurance company now checks their policy records. Okay, this policy is in, this is the property insured, this is the location as per the information they have. They will then register the claim. So they will enter it in a claim register as claim intimation register, that on this policy this claim has come in, this is what is the process. So what will they do? Claim number, policy number, who is the insured, what is the nature of the loss, what is the estimate that they are now providing based on the information provided by the customer. The policy is seen. So if an inspection was done earlier, sometimes the risk engineer may be able to give a closer quantification of the loss. if he is told that this particular section is damaged, so he can have a picture, an idea of how much could be the exposure there and work out a provisional estimate or reserve. Now, on the basis of this provisional estimate, a surveyor is appointed. Now, surveyors are independent parties. They are specialists in the field. They may be mechanical engineers, chartered accountants, civil engineers, all various different types of qualifications. So these surveyors are also categorized by IRDA under certain terms, A, B, C. Senior surveyors or well-established surveyors belong A category. So they will deal with such claims up to beyond a certain level, or where the technical aspects are strong or needed to be taken care of. Then there's the B category, lesser value and not as experienced, and C, junior surveyors who are just starting out or with lesser experience. So each of them will have some limitations. So based on the claims provisioning or the estimate given by the customer, the insurance company appoints a surveyor. This surveyor will go, inspect the damages and work out what could actually be the loss, what caused the loss, obtain all the documentation to prove the extent of the loss from what figures, maybe balance sheets, account records, historical data of the customer, all their balance sheets, their cash books, purchase and sales books, all will be checked to work out the actual loss based on various factors. Now, if it is a legal claim, a lawyer will be appointed to defend the case in the court. So a lawyer will be given. So based on all this, the insurer starts the process. Now these authorities who go and inspect, they will also be asking for documents. So documents supporting a claim, the claim form, the estimate of damages, what are the actual damages done, what are the repair costs, any other factors, if expenses incurred to loss minimize. In a fire loss, we saw debris removal is a small amount is built in free cover. So cleaning up after the fire, those costs involved, there will be receipts and challans and bills for that, which also will be taken into account. So based on all of these factors, all documents in support of a claim. Now, if it was a motor claim, the driver's documents, the vehicle owner's documents, the vehicle registration particulars, all of these will be required. If it was a health insurance, medical papers, the doctor's fees, the doctor's supporting reports, the diagnostic test reports, the medicines, prescriptions, any special tests undertaken, if surgery is done, the operation theatres, hospital bills, all of these are supporting documents for the claim. And all of these documents are usually required in the original. No copies are acceptable. So based on that, when an insurance company is settling against a particular document, reimbursing against an expense, the original bills are required. If they are only for verification, like balance sheet, audited balance sheets of a company to find out the actual asset value that is there for insurance, then the balance sheets are called for, audited balance sheets are checked and verified, books of accounts are all verified. So documents to process and support of the claim. Once the documents are supplied, the surveyor now will negotiate, because claim settlements are sometimes very subjective. So there may be a negotiation on the claim. Now when we look at, for example, insurance, general insurance is an indemnity policy. What is an indemnity policy? To put you in the same financial position you held before the loss. Now for example, you have a cell phone which you purchased 3 years ago, and that cell phone is lost today. What will an insurance company give you? They won't give you, they will give you value for that old cell phone. So new cell phones available in the market, they will see that the same features, nothing better. If anything better is there, they will adjust for that, and they will try to keep to the same. Now the next aspect is they will depreciate. You have used it for 3 years, the cell phone's life is 5 years, they will depreciate from the whatever is the new value, a depreciation will apply. So these are how indemnities work out. Another example of indemnity. we saw in motor insurance, we have what is called as IDV, insured declared value. So insured declared value is nothing but indemnity or value depreciated for age of the vehicle. Now when a vehicle is damaged, where it can be repaired and parts have to be replaced, the parts will not be old, they will be new. So what insurance company will do? They will allow you the new parts, but they will apply a depreciation percentage on the new parts because you have already used the vehicle for some years. You cannot get something brand new for something that is old. So that is indemnity. So negotiations take place because indemnity is very subjective. Negotiations take place between the surveyor and the insured. When they have come to an agreement, the insurance company, or if there is no agreement, insurance company may be involved in the negotiation. Normally then the claims manager comes into the picture. They negotiate to arrive at a settlement. Once the settlement is agreed, the client or the insured gives a notice saying that I am willing to accept, I am agreeable to the settlement. So then the insurance company issues a voucher in settlement of full and final settlement, against which the payment would be made directly to the insured's bank account, and the claim is treated as closed. But that is the process closed for the client, for the insured. Insurance company still has further process to do. In their claims register, now they have to enter all those details as claims paid. They have to note down the claim amount, how much they have settled for, what other expenses have been incurred for the claim settlement, all that, like surveyor's fees, any investigator was involved, their fees. All those fees are also taken into account. They are recorded and the claim is finally closed. So the value now, insurance company's loss experience shows that this claim is paid. It goes under the paid claims. But there could be an element that property was damaged and there was some salvage that was there. That was there some parts which could not be used, which have no other value, but they could be sold in the market some cost could be, or some value could be earned. So the insurance company has to dispose of the salvage. So there will be expenses incurred to advertise about salvage. Salvage buyers will come, will submit tenders based on which the salvage will be disposed. So the value earned from the salvage will also be recorded as a income against that claim. To that extent, the claims ratio of that loss becomes less to the amount of salvage earned. There could also be that the insurance company has to recover from somebody else. The right of subrogation is being followed and imposed very frequently in marine cargo insurance, because there are laws involving various types of transporters. We have in the road transport, they come under the Carriers Liability Act, where they are liable to pay compensation if there's any damage or loss to cargo which is entrusted to them for delivery to a different point. So once the lorry receipt is issued, then the carrier or the transport organization is responsible for any damages that will occur due to negligence of their agents or their employees. So there's a recovery there. If it is in the case of railways, so Railway Act also provides for compensation if the railway destroys or damages property entrusted to them for transportation. So under that law, compensation has to be paid to the owner of the goods or the person who is the owner of the goods who has suffered the loss because while it was in railway custody. So there is a recovery there. Similarly, in the case of aircrafts, cargo sent by aircrafts, cargo sent by couriers, cargo sent by ships, all such consignments, there will be a right of recovery from those transportation agencies. And so that right of subrogation or recovery will be in force. In marine insurance, the right of subrogation or recovery comes into play after the insurance company has settled the loss. So insurance company cannot be made a party to a right of recovery until they pay the claim. Till the claim is paid, the right of recovery is on the part of the insured or the person who has suffered the loss. So they have to move forward and ensure that they protect the insurance company's right. So if they have existing insurance, they must not say that because insurance is there, we will do nothing. They are required to continue the process so that once the claim is settled, the insurance company can now take over the case and move it forward. So right of recovery. So all these facts have to be done. So additional registers and records will be kept showing salvage earned, recoveries made. All of these have to be shown, because to that extent the loss amount that has been paid will be reduced. So the loss experience improves because of these settlements. If an insurance company did not follow that, the loss ratios would be much higher. So this is the basic claims process. So how is it done? So the claims technician, the person in the claims department, in charge of the claims department in the insurance company, has a very vital role to play. They have to be involved from the very beginning of a loss. So once a claim is reported, they have to first check, is the claim falling within the terms of the policy? A customer is required to inform the insurance company that my property is damaged by this peril of the policy. So the most important is the customer proves that the peril which has caused the loss, like fire or riot or lightning or flood, has caused the loss, and this peril is what is as a result of which my property is damaged. So the minute that information is given, now this technician has to go and check the policy wordings and see that is this property really insured? There's a fire policy, yes, but is this location insured? This particular location is damaged. Is it covered under the policy? If it is not, immediately inform the customer, we are sorry, but this location that you talk of has not been insured by us. So you will find that the claims technician needs to have the underwriting papers or the acceptance of the risk always up to date. That data should always be up to date. So once he has shown, he has to inform that the claim is not payable. But if it is meeting all the terms, the next step is now appoint a proper surveyor, check and ensure that the claim is falling within the terms of the policy. There is a tendency among many customers, because a loss has taken place, to inflate it. Let us take another example. A person has fallen ill and has to be hospitalized. If they had no insurance, in all probability, this injured person would have been admitted into a hospital where there's a dormitory of 5 beds to a room. But insurance is there. So what do? They choose an individual independent room. So what the implication is, the cost will go up. So the insurance company may decide that this is excessive. So the management and the claims management team and the TPA, in the case of this medical, it is the TPA who may decide that no, that the insurance company may say that we will pay charges up to this percentage of your room charges. So this will be only proportional. We will not pay you more than this. So there will be some sort of quantification. And very often the claims technician may also visit the loss site along with the surveyor to get a picture of what is the damages, to ascertain whether what is given the value is appropriate or it is being overinflated, or there is only partially damaged and they're trying to recover more, or the area is such that that amount of quantity could not be stored, or not, the process is not correct, processes that we have insured are different. All this will be done at the time of processing of the claim. So they assess, they evaluate, they will verify whether the value of property insured is appropriate. It is a common practice. Most customers we find in all our years of experience do not insure for full value. If I am insuring stocks, I will insure on an average value. I do not insure for the actual price it has cost me or it will cost me. So there will always be some element of underinsurance. So if underinsurance is involved, the insurance company pays in proportion. So underinsurance has a formula. To work out the extent once of underinsurance, we will divide the sum insured by the value of the property. If we take an example, the property sum insured is 10 lakhs, the value of the property is 15 lakhs, and the loss is 2 lakhs. So what will happen? How much will be the insurance company's payout? 10 lakhs upon 15 lakhs, because that's the value of the property, and into 2 lakhs. So proportionate loss will be settled because they have not insured for the full 15 lakhs. So insurance company applies under insurance in that manner. The next element is insurance technician has already made a small provisioning for a loss based on the information given. Now as reports and details come in, that provision may have to be increased or may be decreased based on factors. So that claims reserved or outstanding provision will change. So during the case of processing, the reserve is being changed. It is very important to ensure, because if you over-reserve, it will impact the balance sheet of the company. Under-reserve, again, future losses will hit and there will be a major catastrophe, financial problem for the insurance company. So they ensure that it is reserving provision are as close to what is the loss. The third element, insurance company agrees for a certain settlement. The customer is not willing. They say, no, our loss is so much. In which case, arbitration. So arbitration, if a customer says, I want to go for arbitration, the insurance claim technician now has to try and dissuade, or if not possible, to ascertain somebody who will represent their insurance company in arbitration. If they are quite happy with the qualifications of the person suggested by the insured, then the process can move forward. Claim technician has to be involved in the arbitration process. All facts and documents have to be provided so an appropriate settlement can be arrived at. Even after arbitration, it may happen either party may not be satisfied and they may go in for appeal. But arbitration process is available for the purpose of dispute on losses. Now if the customer, after informing the claim and providing from some documents, additional documents have been called for, or final loss assessments have to be done, the customer does not get in touch, the insured does not get in touch with the insurance company from more than 12 months. There's a policy condition where said if the customer does not get in touch or keep up to date and 12 months pass without any communication, the insurance company can presume that the insurer is not interested in pursuing the claim and they close the claim as no claim. So this is an important factor we have to keep in mind, that customer doesn't come forward with documents, a year has passed, insurance company closes the file as no claim. To reopen the claim requires a lot of additional things which the claims technician must keep in touch and ensure that disputes are settled so that a proper customer relationship is maintained. A very important factor in claims management is to prove that the loss is an exclusion under the policy is on the insurance company. The onus of proof that this loss is not payable because it is an exclusion is on the insurance company. So at all times, the claims technician must ensure that the proof is such that it can stand scrutiny in a court of law. Because once going to court means additional expenses which is impacting financially the company. So always ensure that it is a clear-cut case, there is no way that the claim could be settled. If there are even small chances, the claim technician should always try to negotiate and arrive at a settlement and close up matters. Because legally, legal fees and other defense are much more impacting. So just imagine a loss which could be settled for 50,000. Insurance company is not willing to agree, and so it goes to court where the legal fees run into 20-30 lakhs. So a 50,000 loss has impacted in 20 to 30 lakhs in legal fees in handling this legal case. So unexpected, unnecessary claims expenses. So claims process, a claims technician has to always be open to both and clear about whether policy is aware, coverage is there or not, and guide and ensure that both parties are satisfied with settlements. How is settlement done? If it is property insurance, normally it will be by repair and replacement. So when we say repair, machines are repaired, motor cars may be repaired because they are partially damaged. So all partial losses will go in for repairs. A few parts would be there, labor costs will be involved, some parts may have to be replaced, new parts will be replaced. It is permitted. The second element is reinstatement. Now we saw in engineering that engineering insurance value has to be for reinstatement. So if the customer reinstates the property, the cost that he has incurred, if it is within the sum insured, insurance will pay. If the cost is more than the sum insured, then it will be treated as under insurance. To that extent, there will be the customer or insured will have to bear part of the loss. In fire insurance, by default, fire insurance is a market value, so you may or may not replace. If it is major loss, you may not replace. If it is partial loss, you may repair. You can reinstate. You can take the option of reinstatement, which means it has to be reinstated within a particular time as laid down by the policy terms. Usually within 12 months of the loss, reinstatement process has to be started. Insurance company has to be informed that reinstatement is being done within 6 months of the loss taking place. And reinstatement, all the costs incurred in reinstatement, those bills are to be submitted, and on that basis the surveyor will finally assess the actual values. Or it could be it's a total write-off. It's totally damaged. There's nothing can be done. It has no value now, except maybe a salvage value about 1/4 or 0.5%. So what will happen? Total loss. So in a total loss claim, the insurance policy will cease. Insurance company will pay what is called indemnity value. Reinstatement value is not. They are paying it as a depreciated value, and the policy comes to an end because the property no longer exists. So these are the 3 types of losses that we'll come across in property. In the case of liability insurance, because the claim payment now is not to the insured, it is to somebody else who has been affected by the actions of the insured. Let us take a simple example. The gas leak from Bhopal affected people in the surrounding areas. So who are making the claims? The people who are affected by the gas leak are filing claims against the insured. Those claims the insured informs the insurance company, and the court will be deciding these cases, and based on that the insurance company makes the payout to the customer through the court of law. So payments to third parties are done for injuries or death or even damage to property. So these liability cases are normally court awards, or if there's clear-cut case, it has gone through a court of law, the cases are taking a long time, but the claims technician feels that yes, there is a liability under the policy, they may agree to arrive at an across-the-table settlement, in which case, after the agreement between the parties who's claiming and the insured or the client arrive at a settlement, this settlement must be filed in the court of law, or the case has to be withdrawn from the court. Otherwise, that case will also go on and the settlement also. So there will be double payments. So court awards, any legal case, then must be consent terms must be filed in the court so that the court knows that this case is not moving forward. Both parties have come to an agreement. These are facts that have to be kept in mind. So the process of dealing with a court case means legal fees, lawyers, solicitors, all of those are extra costs that a claim will be incurring. What are the recoveries that take place in claims? Every insurance policy today has an excess or deductible. The intention of the excess or deductible is to make the insured a little responsible for the loss. So if the insured has to bear part of the loss, the insured will take a little more care. The second reason is insurance company does not want to get into small losses, because the administrative cost of managing a claim would be more than that. So what they try to do is avoid these losses, so don't let the insured file a claim, and so reduce the cost and expenses of managing a claim. And because of the reduced cost, the premium rates can be a little better than otherwise. The next is subrogation. So we saw in marine insurance, the customer who has given the cargo for transportation against a particular transport company files a case against them that you have caused my damage to my property, please pay me for my loss. So that's what subrogation is about. Insurance company then takes over that right when they settle the claim. They take over that right and move it forward and claim. So they have paid the claim. Whatever is finally awarded by the court for that settlement, they will adjust it in the claim amount. So to that extent, the claim amount will be reduced. Contribution. More than one policy was in existence, or there was a co-insurance in the policy, which means more than one insurer insured for the same risk. So it is important to obtain the contribution from the other insurance company or the proportionate share from the other insurance company. So contribution, co-insurance, we have to recover from the other insurance companies who are part of the insurance companies who have insured the asset. Salvage disposal, we saw salvage, how salvage is disposed of. Tenders are appointed, so the income incurred from that salvage is adjusted against the loss. Sometimes the salvage is so minor that insurance companies may collect a lot of salvage together, store it at a place, so they have incurred costs for storage and dispose of it as a full lump sum, in which case all of the claims where the salvage is involved, those salvages are placed there, all of them together combined, the salvage is adjusted against all of them together. So salvage disposal. Reinsurance. So if I have arranged for insurance and placed the risk for reinsurance, I can recover part of my share from reinsurance. Now we saw earlier that in general insurance industry in India, 10% as of today, in your books you would come across 20%, but today it is 10% of every risk that an insurance company accepts. Every policy that an insurance company accepts in India, 10% is shared with GIC. Now this is a quota. So what happens is that 10% of the premium an insurance company has received is also shared with the GIC, the national reinsurer. So GIC takes 10% of the premium as their share of premium for accepting 10% of the risk. In addition, we may be placing with other insurance companies. If it's a quota share, it is in same percentage. If it is a facultative, it will be as decided at the time of placement of the reinsurance. So when the losses are reported and under a policy that is to be under facultative, the reinsurer concerned has also to be informed that the loss is there and there's a provisioning of this much. When the claim is settled, that loss also has to be informed to the facultative reinsurer, because they will also share in the reinsurance. In the case of the quota share, it will normally be done at financial year ending or as per the account recording and what we call account rendering terms agreed between the reinsurer and the insurance company. So these recoveries have to be done on a regular basis. So claims management team and the claims technician has a lot of work to make sure that reinsurance is. Even at the time of acceptance, every insurance company will have certain underwriting guidelines about how much each insurance company or each branch can accept without referring to head office or referring to the next higher authority. If they want to accept more than that amount, they have to get permission first, because reinsurance has to be placed. Now look at an example. How that exposure can hit. A reinsurance has been placed. For example, today we have a trend of companies owning their own aircrafts. So from the headquarters, they travel to factory. From the factories, they are going now. Normally, not one individual, but 3-4 individuals will go at any moment of time. So in that aircraft, there will be 3 people of senior level traveling in the aircraft. So if an accident takes place, a single loss element comes in. So not individual sum insured for personal accident, but now it becomes a combined sum insured. So this is the loss, what we call the PML, or probable maximum loss. Similarly, in a factory or in a city, if a cyclone hits, properties in that entire city are affected by the cyclone, all of them affected at one moment of time, probable maximum loss. So in reinsurance, these factors are taken into account in placement of insurance and arrangement of reinsurance terms. So recoveries also should be made to ensure that the claims ratios can be reduced, or the claims costs can be brought down. Unfortunately, managing claims is not easy. All of us have a tendency to overstate. You know, when you want to tell a story and make it more interesting, every one of us will add some more features, masala. Similarly, when a loss takes place, most customers will try to bring in some extra costs so that they are taken care of. In fact, in our time in motor insurance, when I used to be dealing in motor insurance, the estimate from the repairers would always be so excessive, it was a given that the assessment would be reduced by a minimum of 50%. So inflated to by 50%. So we would reduce it by 50%, sometimes even more. So what happens is leakages takes place in different ways. Sometimes it may happen by mistake we have paid more. It does. We have not checked the bills properly, or something is missing and by mistake it has been paid. Or a bill. There is a bill and there is a statement of costs. The bill is the final statement, but we have looked at it as being two separate expenses and we have paid. So unintentional overpayments. Inefficiency or excessive claim costs, a very common feature. Many claims technicians don't want to visit sites. They sit in their office and send somebody else. Now that somebody may not be too familiar with insurance policy terms and so will look at in a different manner. And cost, because you have appointed an outsider, additional costs are involved. That person may charge per day that they're touring and every other cost. So unintentionally, claim costs have gone up. Failure to decline claims. There is a tendency of most customers today, or most insurers today, when a claim is reported, they do not look at all the details of the claim, because at the initial stage itself, you could say that the claim is not payable. In Medicaid claims, so often we have come across, customer has said that I had a cut and I had to get stitches done. The stitches did not require hospitalization. It was not a major. At the stage when we are informed this is the and immediately the insurance company says, sorry, claim is not payable because it is not a hospitalization or it does not require hospitalization. But we find that the insurance company registers the claim, waits for all the bills, and then. So what happens? An ill feeling is created and increased cost. The amount of cost in registering, creating a file, following up, it's all time and effort costs. So failure to decline claims immediately. It should be done so that we reduce the cost. Then failure to recover excess, subrogation or contribution. We have already seen those things that should be recovered. We forget. Ex gratia. Ex gratia is a unique feature. What does ex gratia mean? That the claim doesn't fall within the terms of the policy. For some reason, the insurance company, it is a genuine loss, but it doesn't meet the conditions of the policy. But the insurance company, maybe for customer relationship or other reason, decides to make a settlement. So this is called ex gratia payment. So ex gratia is one-off. Normally the authority to give an ex gratia settlement is not with the branch office. It is usually at the highermost authority who can decide it. So an example I will give you. There had been a soldier who was on duty at a front site, met with an accident when he slipped and fell on the rocks and the ravine. Now, as a result of this injury, unfortunately, he died. He had a personal accident policy. Now, personal accident policy does not cover soldiers and defense personnel when they are on duty. So, the personal accident policy will not pay. As a special case, because he was on a front at a time of very critical time, the insurance company decided as a special case, it was an accident, we will pay as an ex gratia. So this was out of grace. It is not binding on an insurance company. So these are issues, in very, very rare cases, it goes to ex gratia. The other issues that insurance company face, and that's fraud. I show you examples of overstatement. But there are also criminal acts. A number of customers we find in motor insurance, the vehicle is already destroyed and damaged. Insurance is not there. The owner comes to take insurance after the loss and then tries to recover the claim. There are many such cases, many other issues. Sometimes the customer is directly doing it, sometimes there is involvement of a number of parties. So these issues have to be taken care of in claims management. It should be avoided. That is why the claims technician's responsibility is very, very great. So with this, we have seen rating and we have seen claims and how it goes about. We've just given a picture. So with that, we'll close our session for the day. Thank you very much.